Welcome back. You're watching us on Halftime Report. Let's get chatting with the management of Unicommerce eSolutions. Kapil Makhija, the managing director and CEO of the company, is joining in. Kapil, good afternoon. Thank you so much for joining in. I'd club two questions into one, right, because of your recent tie-up with Hummel. How has the growth been in the sportswear segment as a whole? I'm sure it must be at a decent scale considering that you've tied up with Hummel. If you could share a number on that. And how is this Hummel tie-up going to support your growth going forward?
First of all, good afternoon. I'm glad to be here. Thanks for inviting me. I think we are, as we mentioned on your show before as well, we are an e-commerce enablement SaaS platform. So a lot of brands today work with us to manage their e-commerce operations. Our partnership with Hummel is in a similar line, where we are helping them streamline their post-purchase journey. Our vision is to become a one-stop shop for e-commerce enablement, and with the recent acquisition of Shipway, we have been able to now ensure that we have a full stack. So today, Hummel is enabling an end-to-end post-purchase journey management through our stack, where we are helping them manage their multiple demand channels along with their multiple warehouses. We are seeing the e-commerce growth across many sectors, although we've seen the last year was a bit soft for e-commerce, and we've seen the softness continue this year as well. But we are seeing many categories demonstrating strong growth. We have published a recent report on festive season growth as well, where categories like beauty and personal care, sport, etc., are doing well. We are a sector agnostic platform, so we work with brands across multiple categories. Along with Hummel, we've done partnerships with Healthcard, Landmark Group, and many others. So I don't think there's a specific focus on a sports category per se. We are a sector and a scale agnostic platform, so we continue to onboard brands across different sectors and help them streamline their post-purchase journey so that the experience for end customers which shop on various brands such as Hummel, their experience gets streamlined. So that's our main intent as a software platform.
Got it. All right. So you're indicating that there is a good growth potential from year on, good business potential, and you'll have to see how this pans out. Any more signings should we be looking forward to, in the coming month?
Yeah, so we continue to add a lot of logos. We added 100 plus enterprise logos in Q2. So we continue to add logos across various sectors, and we will continue to publish them on a regular basis. We continue to be a trusted choice by many brands across varying sectors, across varying scale. We work with the likes of Mama, Sugar, M Caffeine on the D2C or digital first brand side, as well as many traditional brands like VIP Bags, Fab India, PCNS, Imami, etc. So we continue to be a trusted platform for many brands across many sectors.
Yeah. So you added 100 plus logos, I think, in the past quarters, what you said. From year on as well, should that be the quarterly run rate that you're looking at?
Hard for me to comment on that. Typically in during the festive season, there is a bit some brands take some time to adopt a new solution. But I think on an annual run rate basis, we continue. Like in Q1, we did about 85 acquisitions, 100 we did in Q2. So we'll continue with that similar run rate in the 85 to 100 sort of a run rate on a quarterly basis.
Kapil, before we get to other aspects of your business, you mentioned Shipway in your first answer. Get to that and get that out of the way first. It's still currently loss-making, right? For FY24, Shipway's net loss was around about 2 crores. When do you expect that to break even, one, and then turn profitable as well, if there is a timeline?
Sure. If you look at the trajectory for Shipway, they have already, on a standalone basis, they've been working on improving the loss trajectory. So in FY23, they were at a 42% PAT loss. In FY24, they were only at a 5% PAT loss. So there has been a significant improvement in their profitability as a business on a standalone basis. On top of that, by joining hands, today we see a lot of synergies on the cross-selling side. Combined entity of Unicommerce and Shipway has a customer base of 6,500 plus brands and sellers on which we can cross-sell both the company's solutions. So that help get a revenue boost. Plus, we see synergies on the cost side, both direct and indirect. And that's why our intent is that by joining hands, seeing the synergies that we have, we are hopeful that we should be able to turn the business around and make it profitable very soon and continue on the growth trajectory as well. It solves a very important pain point because courier aggregation, which is a space in which Shipway plays, is a large market opportunity. It's nearly a 4,000 crore market opportunity. And that's why it has significant potential for us to build a consistent growth on our top line. And on top of that, it helps us fulfill our vision of becoming a one-stop shop for e-commerce enablement, because for brands in India, they now get everything under a single umbrella.
How soon is very soon, Kapil? Because you mentioned very soon. If you could give us a timeline, right? By the end of FY25, by FY26, when does Shipway turn profitable? If the street would want to know that, right?
Yeah, sure. I think it'll be hard for me to comment on the timeline, but what I can definitely assure you is that's one of our key priorities, and we are very hopeful that we should do that very soon.
All right. Kapil, we want to understand about how Q3 is panning out without getting into numbers. So give us your sense about how the festival demand was and also the Black Friday sale. Better than estimated, demand was strong. Your initial take.
Yeah, so I think we have seen during the sale period, we see some strong uptick. The Diwali festive season also, we published a report where we saw 15 to 20% spike. And we've seen a similar spike during Black Friday. But what happens just after the sale period is that the softness in the overall demand continues. So there is some spike that we see during the sale period, but beyond that, the softness continues as we'd seen in the last year. So while the quarter is yet to end, and there are more festive sales coming up in terms of end of season sale, etc. So I think we'll be able to comment on Q3 better once this month closes by. But I think as a theme, what we are seeing is that we see certain amount of spike during the festive sale period, which could be a week or few days. But beyond that, the softness in the e-commerce market continues.
Kapil, your volumes during the second quarter grew 22%, right? That was because of the additions of enterprise clients. Your enterprise clients number stood at around 904 at the end of the second quarter. What do you expect to end the year with? And does this 20% plus volume growth trajectory continue going forward as well?
See, a lot of our volume growth is driven by growth of our existing customers. So very hard for us to comment on how they are going to grow because we are a very sticky solution. Once a customer adopts our solution, it is sort of a marriage for lifetime. They continue to use us for a very, very long time. It becomes a lifeline for their business. So a lot of our transaction growth is a function of our existing customers growing along with the market. So our transaction growth is a function of how the market is growing. As I said, during the sales season, we are seeing this 15-20% sort of a spike, and after that there is some softness that continues. So once the number come in for December, we'll be able to talk about the transaction growth. So a part of our revenue growth is also driven by new client acquisition, because new clients, once they come on board, they take some time to put in their full volume. So I think a lot of our transaction growth is a function of the existing clients growth, and the revenue growth is a combination of existing clients and new clients.
Got it. Kapil, what is the margin guidance you can give us? Because it's very volatile, very quickly. If you could give us a number.
So we've always been consistently demonstrating operating leverage in the business. Our margins have always expanded faster than the revenues, and we are hopeful that we'll continue to demonstrate that trajectory going forward.
Right. All right, Kapil, thank you so much for sparing time and joining us. Wish you good luck for the second half of the year, the management of Unicommerce eSolutions. Time for a short break. Up next, Lata will be in conversation with Neelkant Mishra of Axis Capital on India's economic outlook for 2025. Stay tuned.